To talk to us about the rupee movements, we are joined by Anindya Banerjee, Associate Vice President, Currency Derivatives at Kotak Securities, who is joining us on the phone line from Mumbai. Anindya, thanks so much for being with us. What is leading to this kind of move in the rupee? Is it because of the consistent FI selling pressure? Is there something else at play?
Yeah, thank you for having me and good afternoon to everybody. It is linked to the FI selling pressure because over the past, since the announcement on monetization and after that the election in US, we have seen close to $2 billion outflow in both if we combine equity and debt segments. So that is causing a downward pressure on the rupee. And at the same time, it is not that the Indian rupee is getting singled out. It is a phenomenon which is happening across the emerging market basket. For the simple reason that the U.S. Bond yields are going up. So when the U.S. bond yields rise, dollar becomes attractive, and that's the reason why money is going out of emerging markets into America.
How significant have the bond outflows been? Because we have seen that whenever the government comes out with sale of the bonds, they get lapped up very quickly and very soon the ceiling is filled. What's happening on that side?
Actually, something very interesting trend has unfolded since the announcement on monetization. Indian bond yields have decoupled from the trend of the global bond yields, including the emerging market. For the simple reason is that this huge influx of liquidity which is coming into the banks, they are being forced to park into the treasury securities. So that's the reason why a lot of demand is being generated in the domestic market. But the response from the FIs has been quite lukewarm. So they are utilizing this rally in the bonds to book some of the profits.
Okay, but are there any significant outflows?
Day before yesterday, we had seen a $1 billion outflow from the bonds. So that was a large outflow because that kind of outflow was not seen since Jan-Feb of this year. So that was significant, but that did not have much impact on the yields, and that tells you the enormity of the demand that is coming from the DIIs.
All right. What we wanted to understand is that is there any kind of panic, in the rupee markets, anything like what we saw in 2013 when the rupee came crashing down to about nearly 69 to a dollar?
Right. No, there's a huge difference between 2013 and now, though the global situation is actually pointing towards a run on the emerging market. That can happen if the U.S. bond yields continue to rise. But our macros have far improved. We have a stable current account, and with the political stability and economic growth, we don't fear that kind of a run. But yes, if the emerging market currencies continues to depreciate, especially till the U.S. central bank meeting, that's mid of December, we can see the rupee slowly depreciate against the dollar and head towards the level of 69.
All right. If it does go towards 69, what will be the impact on flows into the country? Because, like you mentioned, the differential between the US yields and the Indian yields are going down. So there is a flow towards the developed markets. In such a scenario, are there any worries on a current account deficit or, what happens to trade? Anything there? As
the deposition happens, the people who would be getting a little panicky would be the debt investors, because they are generally unhedged on the currency front, and a deposition beyond the point starts liquidation pressure from them. So if we get to levels of 69.5 or beyond in the let's say over the next few weeks, we can see a little more selling from the FIs into the debt.
Okay. What about the FCNRE redemptions? There was some pressure there also because some parts were not hedged properly. The rolls have been happening for a few months, but there was a huge gap. Now, what is the situation there like?
As far as the data we have, November, by the end of November, almost like 90% of the FCNR outflow should be done with. FCNR, I don't think it's been a big factor in the rupee movement. For the simple reason, if you look at the entire chain of transactions, where RBI has bought dollars from the market and now RBI is supplying the dollars to the banks to pay out the NRIs, the entire thing is more or less hedged. Yes, some temporal imbalances can happen, but that's not significant.
All right, Anindya, thank you so much for speaking with us at NDTV Profit.